Hey guys, so in today's video, I just want to go over how to draw basic support and resistance lines on your chart, which can significantly help you improve your stock entries, stock exits, and this strategy can be applied to any equity, any bond, any option trade you're applying or using, and this can also be applied to basically any time frame. Technical analysis is universal to any time frame you use, any stock you use. It's just a way for us traders to visualize the emotions of the stock market, because primarily the two main forces that kind of move the stock market are emotions and fundamentals. So on the emotional side, at least, that's how we traders can take advantage of the emotions, look at support and resistance, and best judge our risk to reward ratios when we trade in the stock market. So on the screen up front right here, I have the daily chart on the S&P 500 ETF, which is called the SPY or the SPY. And this is a daily chart. You can apply this to any chart you want. But the daily chart here shows a pretty a good example of how we can apply support and resistance to buy and sell our equities. So in this case, typically when we're looking for a support area is essentially where if you're looking at a line or if you're looking at a ball, you want to look at where the price is bouncing off of. So if the stock is coming down, right, it's coming down, but then it bounces off of a certain level, right? And then it comes down in the future to that same price level and bounces off again in that general vicinity, then that is what we call a support area. A support area has to have at least 2 points of contact, and same applies to a resistance area. So just by looking at this chart, one of the main support areas that we can see very obvious here is this area right here, which is a 300 level. So you can see the price rallied from the March lows, had a top in June, came down to this general zone, then went back up for a couple of days, right? And then the next few weeks, it slowly crept back down to that same price level. But instead of going lower, it bounced off this price level. And as you can see, it rallied higher. So this is one of our very obvious support areas on this chart. And typically when you want to draw a support zone, you want to draw it on the bodies of the candle. So if you look at this candle right here, this is the opening price of that day. And you can see, even if you just drew the line based off that single day, right, and try to time your entry, right, if you didn't know what happened after this date, right, you could have timed your entry at that same price level, right? You could have bought at the same price level and made a good profit on the rally higher in the next few months. But typically you want to focus on drawing your support and resistance zones on a body, not a wick, because the wicks are representing extreme price levels that typically are very uncommon in the market. They're typically only existent when the market is extremely volatile. And as traders, we want to be very consistent with the way we manage our trades. So it's not very sustainable in the long term to be using the wicks for your general support or resistance. Obviously, whenever you have multiple points on a support line, like we have here, it's completely fine if you have one wick touching the support line, but make sure that at least one of your points on your support or resistance line accompanies a closing or an opening price, or inside the body of the candle. That's typically what you want to focus on. Now, this is a support area. So this is typically when we want to buy a stock. Now, if you want to sell a stock, right, or if you want to hold your position, right, or not sell your stock, or basically if you want to keep your position, if it's a long-term investment or a long-term swing, you want to use resistance to get an idea of whether or not you should hold or sell your position. So on this chart, one of the main resistance areas that I can see right off the bat is this general zone right here. So a support or resistance line doesn't actually have to be a line either. It could be a zone. It could be a supply or demand area as well. So if we look at what happened back in February, market came down, right, bounced off this level. So this is a general support area. And actually getting off a little bit of a tangent here, but if you didn't know that the March crash was going to happen, right, you would have drawn this support area down here, a general support area, right? This is from 2018, 2019, right? A general support area. You can see price bounced once, twice, three times, four times. And typically the longer, a support or resistance area is held, meaning the more times the line is being touched by price, the stronger it is down the road. And if you looked at trying to time the market back in March for a bounce or for entering a long positions, if you had these support and resistance lines drawn out on your chart, right, you could have clearly timed one of these bounce levels in the March crash, right? You can see the price came down to the same exact zone, the 283, and bounced off, right? But that's getting a little bit off tangent. But when I was talking about resistance, so price came down, bounced, and then went back down for the March 18th low at 218. As you can see, where did the price get rejected at, right? We can see the price got rejected at this level right here, right? So we had two candles kind of, well, one candle closed at that level, and then another candle's wick went up to that level and then came back down. So that just tells us that this is an important zone. So we mark this out as a resistance zone because price couldn't get above this zone. Now, if we look at, if we scroll ahead on the timeline, right? We scroll ahead slowly and see what happens to the price back in May, April, and June. We see that price came up to that level once and got rejected twice again. So if you were in this market long, if you had bought these support areas down here, right, you instantly have an area to judge your selling position for. So this 312 area right here on the chart is clearly one of the sell zones that we can use, because we know that historically this is the resistance area, right? It got rejected once and got rejected twice. And now what's happening is it's getting rejected 3 times. So, this is my signal for selling my long positions, right? On this red day, typically. Typically, when you have a red day that closes below the support, or sorry, the resistance area in this case, that's typically a kind of a red flag saying that you should either scale out your position or completely sell your position. So what we see happen is price went up. In this case, what happened is price gapped up above that zone. So this is one of those euphoric moments in the market that only kind of solidifies the importance of support or resistance. So in this case, right, if you had sold your long position here, the market gapped up above the resistance level, right? And it got rejected at this 322 level. Yes, you could have maybe squeezed a couple more points out of the S&P 500, but to be in the game long term, you have to focus more on the resistance areas than the specific price levels. So in this case, what happened is price came to this area. As you can see, right, the price never was able to close above the area. What it had to do is it had to gap up above that area, right? And it gapped up on kind of decent volume, and then it kind of just traded sideways, and it wasn't actually showing any signs of strength. So then what happened is it kind of traded sideways, and then boom, it crashed back down, right? So it wasn't able to break above another new resistance area, which was this area. So I can mark that out as well. And if you look at it, you can see that if you come back here to this February timeframe, the price got rejected here as well. So you can see that the opening price of this specific day was in the same vicinity that the price got rejected here. So this is another example of a resistance area, right? And another very important concept you have to keep in mind is whenever a support area is broken, it typically turns into resistance. And whenever a resistance area is broken, it typically turns into a support. So if you're just drawing this line based off what happened in June, you can see that previously price kind of came back down to this area and bounced, as you can see up here, right? It bounced, went higher, then came back down, got rejected from that same area, right? And then it went down all the way to 218. But now that it's coming back up to the same area, it actually got rejected as a form of resistance. And this is a very, very important concept to keep in mind as well, is that support and resistance can play in opposites whenever they're broken. So if you were ever trying to time the market, right, time the high of this market or the top of this market, you could have clearly drawn these resistance or the support area back here and use this as a kind of like a metric to judge when you should either scale out of your long position or sell your long position. And that's kind of one of the main applications you can use for support and resistance. So the main things to keep in mind is that the more times the support or resistance area is tested, the stronger it is, right? And typically, whenever a support or resistance area has at least one body or any opening or closing price close in that same zone, that's another sign of price strength in that area. So there's a higher likelihood that the price is either going to get rejected from that resistance zone, or price is either going to bounce from that support area. And as you can see, this 322 level, right? Resistance once, resistance once more here in July, right? And then once this resistance broke, boom, the market went higher all the way to the beginning of September. So this is, another perfect example of how you want to, trade resistance and support. Once resistance breaks, it's bullish. Once support breaks, it's bearish, right? Once support breaks, it's typically going to turn into a resistance area. And once resistance breaks, it's going to typically turn into a support area. And you want to kind of make sure that you have those executions done perfectly near these support and resistance areas to kind of maximize your risk to reward. Because at the end of the day, it's your job to minimize your risk, right? And it's your job to manage your capital and manage your risks in this game, because the market is very volatile, especially in this time and age, in this day and age after the pandemic. And a lot of traders out there kind of struggle with the basics of support and resistance. So I hope that this video kind of cleared up the basics of how you want to use support and resistance, right? You want to be very patient with your entries and your exits, right? Look at the chart. Look at what the chart is doing. Wait for a support area to come. Buy the support area. Set your stop loss, maybe like a couple of price levels below the support area, right? And then just buy into the position and let it go. Let the trade play out, right? And then wait for the next resistance zone to come up to judge what happens, right? Is the price getting rejected by the resistance zone immediately, or is it actually showing some signs of strength, right? Where it's either kind of just like consolidating at a resistance zone, which is typically considered very bullish, and typically is a sign that the resistance zone is probably going to break. So if you're in a position when a resistance zone is breaking, you want to stay in the position. If you're a long position, obviously, right? And if you're not in a position, then typically you want to look for buying opportunities when a resistance zone breaks. And that's typically one of the ways that you can execute both swing trades and day trades as well. And it's one of my favorite strategies that I apply as well. Yeah, so if you guys have any questions about this, feel free to, hit me up in the Discord, obviously, and through DMs. I hope this clears it up for, all our members in the Discord. And also, I'm going to be sharing this video on Twitter as well. So if you guys have any questions, feel free to message me or tag me on Twitter or in Discord. But it's very important to understand support and resistance. So I really hope that this video helped you out. And as always, guys, yeah, take care. Happy New Year. Hopefully 2021 is going to be a lot better than what we've had this past year. And I wish you guys the best of luck in trading. Take care.